The right tax planning strategies can help you determine how to prepare your taxes as a self-employed person. Keep watching to learn more about tax preparation and tax planning as a freelancer or business owner. The business structure. As a sole proprietor, you can file your personal taxes. However, if you have an LLC, you'll need to file taxes for your business too. All this can affect how to plan for taxes and how to prepare your taxes. Business bank accounts. Even if you don't have employees, you should get a business bank account to keep those expenses separate from your personal bills. You won't have to go through your bank statement and categorize which bills are personal and which are for business, making tax planning easier. Tax brackets. Tax brackets separate your incomes and tax it at different rates. No matter how much you make, the first $9,950 for a single person will have a 10% tax rate. And the amount from there to $40,525 will have a tax rate of 12%. So even if you make 30%, you'll only have to pay 12% on just over $20,000 of that. Simply put, understanding how tax brackets work can help you estimate what you'll owe in taxes. Report everything. Your taxes need to be as accurate as possible, and that means reporting all your business transactions. It can be tempting not to report cash payments, but doing so could cost you later. If the IRS decides to audit you or your business, you need to know how to file taxes properly. If you don't report everything you earn, the IRS could send you a bill after the audit. Take command. Don't trust others to handle things in your best interest. Make sure you check on everything. One significant area of leadership is empowering your accountant to help build your tax strategy. They aren't just plugging in numbers. Accountants have valuable knowledge that may be leveraged for you. Make sure your payroll and human resources are also staying up to date and aware. Depreciation of equipment. When it comes to equipment for your business, you may want to consider carefully whether it's a good idea. In the current tax law, you can deduct up to $1 million in equipment up front. If you're anticipating a significant growth in profits over the next few years, consider waiting on that deduction. While tax planning, speak to your accountant about spreading out that write-off over a few years by claiming depreciation on the equipment. As your taxable income goes up, so will the money you save on the write-off. Expenses in all forms. Careful tracking of expenditures and reimbursements is a cornerstone of good tax strategies. Being informed and doing your research is the only way to make sure you don't miss anything. If you have any questions, you should immediately ask your accountant. It's their job to help you understand taxes. Using winning tax strategies can be the difference between a business that makes it and one that fails. Don't risk your future and the future of your employees. Use all the resources at your disposal to deal with taxes legally and fairly. Whether you're a sole proprietor or have an LLC, you need to track your expenses and report everything you earn and spend. Do you need to organize your business expenses? Maybe you need to create pay stubs for yourself and your employees. And check out our site for more details. And remember to comment and subscribe to our channel. And visit thepaystubs.com to create your own pay stubs today.